After studying this module, we shall know the meaning of wages and salary, understand the difference between wages and salary, learn about various laws on wages in India, identify the various factors affecting wages and salary, explain types of wage payment methods, analyze components of wages and salary.
Wages refer to compensation paid to workers for their contribution towards organization in monetary form. According to Benham, wages are a sum of money paid under the contract by an employer to a worker for the services rendered. According to Yoder and Henneman, wages are compensation of wage earners, the numerous employees who use the tools, equipments of their employers to produce goods and services that they are sold by employers. According to Section 2, subsection 6 of the Payment of Wages Act 1936, wages means all remuneration, whether by the way of salary, allowances, or otherwise, expressed in terms of money or capable of being expressed so, which would, if the terms of money are capable of being so expressed, which would, if the terms of employment, express or implied, were fulfilled by a payable to a person employed in respect of his employment or the work done in such employment. Thus, wages means all remuneration due to any worker or employee if the terms of contract of employee are fulfilled. It is important to note that wages do not include perquisites like house accommodation, employer contribution to provident fund, gratitude payable, overtime allowances, etc. Wages are generally paid in monetary terms after the completion of certain amount of work like 1 day work, 1 week work, etc. They are generally set by collective bargain of workers or by the government regulations, which states that the minimum wages payable to workers by his employer. In 1990, in Australia and New Zealand, for the first time, the concept of modern minimum wage combined with the compulsory arbitration of labour disputes was introduced. Salary, on the other hand, refers to remuneration paid, which is uniform in nature and is determined irrespective of number of hours worked. According to Oxford Dictionary, salary can be defined as a fixed regular payment, typically paid on a monthly basis, but often expressed as an annual sum made by an employer to an employee, specifically in professional or white-collar worker. According to Income Act, salary can be defined as remuneration received by or accruing to an individual periodically or for services rendered as a result of an express or implied contract. According to Section 17, subsection 1 of the Income Tax Act gives an inclusive, not an exhaustive definition of salaries, including therein wages, annuity, pension, gratuity, fees, commission, perquisites or profits in lieu of salary, advance of salary, amount transferred from unrecognized provident fund to recognized provident fund, contribution of an employer to a recognized provident fund to recognized provident fund, contribution of an employer to a recognized provident fund in express or prescribed limit, leave encashment, compensation as a result of variation in services contract, etc. Then contribution made by the central government to the account of an employee under a notified pension scheme.
We shall now study the legal aspects of salary. Section 17 of the Act gives an inclusive definition of salary which broadly includes 1. Basic salary, 2. Fees, commission and bonus, 3. Taxable value of cash allowances, 4. Taxable value of perquisites, 5. Retirement benefits. Although all the components of salary income are included in salary, there are certain incomes in each of these categories which are either fully exempt or exempt up to a certain limit. The aggregate of the aforementioned incomes after the exemption available, if any, is known as gross salary. From the gross salary, three deductions are allowed under Section 16 of the Act to arrive at the figure of the net salary, and they are: 1. Standard deduction, Section 16(1). 2. Deduction for entertainment allowance, Section 16(2). 3. Deduction on account of any sum paid towards tax on employment, Section 16(3). Wages include: 1. Remuneration payable under any award or settlement between the parties or order of court. 2. All those remuneration to which person so employed is entitled in form of overtime or holidays. 3. All those additional incomes which he is entitled because of the very nature of the job. 4. Any sum which by reason of the termination of employment of employee is payable under the law. 5. Any sum payable under the scheme framed by the law for the time being in force when employee was employed. But there are various items which, as previously mentioned, are not included in wages. 1. Any bonus which do not form part of the remuneration payable under the terms of employment. 2. Value of house accommodation, supply of light, water, any medical attendance which are excluded from computation of wages, which are excluded on general or by special order of court. 3. Travelling allowance. 4. Gratuity paid on termination of employment. We shall now study in detail each method of wage determination. One of the wage payment method is based on the time spent by worker on the job. Under this method, wages payable to worker are determined by the amount of time they spend on their job. This method is also called time wage system, as wages are based on time spent on the work. Under this system, productivity level or output level are not emphasized on. Under this wage plan, employee is directly rewarded for performing his duty based on time spent by him in the organization. It is a direct monetary reward system under which employees are paid on the basis of number of hours spent in the organization. Wages under this method can be determined as wages equal to number of days worked into rate per day. So if an employee has worked for 25 days and rate per day is rupees 150 per day, then his wage bill will amount to rupees 3750, that is 25 multiplied by 150.
There are various advantages of this method which will be discussed next. This method ensures employee gets a regular income which provides them security while they are performing their jobs. This method promotes loyalty among employees as they will never leave organization which provides them security and will work hard to make it a success. This method is very beneficial for the beginners as they need some time to learn their job. It gives them chance to concentrate on learning allowances, then to take as much as time as they want. This method emphasizes on the time spent instead of units produced, so workers get time to produce the quality work. These methods provide easy administration and computation of wages as it is easy to understand and keep record of wages for both management as well as for employees. This method does not require complex calculations. It is simple in nature as well as economical in record keeping. It promotes cordial labor relationships and is preferred by the labor unions as it protects the interest of all workers. This method gives sufficient time to workers to produce as they are under no pressure while working, which leads to efficient handling of machines and tools, thereby leading to a less breakage of machinery. This method is most suited for artistic work.
This method isn't free from drawbacks. We shall now consider them. These are: A. Under this method, close supervision is required as workers have tendency to waste time, which increases cost of supervision. B. This method does not differentiate between efficient and inefficient workers. So an efficient worker gets treated in the same way as an inefficient one. So it does not provide incentive to efficient workers. C. Workers under this method waste time. They take more breaks, indulge in conversation, because of which a lot of time is wasted. D. Organization is not able to achieve production level that it can if everyone works hard. So potential productivity level is not achieved. E. This method does not lead to achieving potential productivity level, and there is also a need for close supervision. It leads to increased cost of the organization. F. It is difficult to measure efficiency under this method as workers are paid at equal wage rate. G. This method acts as an impediment in long run growth of the organization because workers are not efficiently working, they lack incentive to work hard and gradually shirk responsibilities, which overall affects productivity level. Though this method has various disadvantages, it does not mean it is not suitable at all. This method is suitable under various circumstances such as: A. It is suitable when management can supervise as well as motivate them at the same time. B. When employees are new and need time for learning their new job. C. This method can be used in the training period of the employees. D. When output produced is not measurable in terms of units or any other terms. E. Where quality of work is prime concern. F. Where there is no clear relationship between efforts put by employees and resultant output. G. Where set standard of work performed cannot be established. H. Where task has to be performed by a team rather than performing it on individual basis. I. Where an organization wants to have simple and easy wage system. J. When production is not of the nature that it requires efficiency rather than speed. Next method of calculating wages is on the basis of output produced. This method is also called piece wage system, under which wages are determined on the basis of output produced rather than time spent. Under this wage system, wages are directly related with their performance level, which is measured in terms of output produced. So employees who perform better are paid more rather than the inefficient ones. Under this method, wages can be determined as wages equal to rate per unit of product multiplied by total number of units produced. Example: if one worker produces 5 units and other worker produces 9 units and the rate per unit is rupees 100 per unit, then first employee will be paid 5 multiplied by 100, which is equal to 500, and second worker will be paid 9 multiplied by 100, which is equal to 900. So employees are paid on the basis of output produced.
There are various advantages of this method, which shall now be our area of discussion. This method ensures that employees who give more to the organization are paid more. They should be rewarded high for high efforts. So there is a direct relationship between the results produced and the rewards received. As mentioned, there is a direct relationship between the efforts and rewards, so it leads to an increase in productivity among employee level as well as in the organization. One of the disadvantages of previous discussed methods was it to demotivate efficient employees. This method overcomes that limitation and motivates employee. This method provides income opportunities to those who work hard. They give more reward and get rewarded suitably. Resources are put to their best uses as employees who are motivated aims at increasing working productivity, which leads to more utilization of resources as well as minimum wastages. Increased motivation leads to increased productivity, which in turn leads to economies of scale, thereby leading to low cost of production per unit and overall less production cost. Employees are self-motivated under this method as they are very much aware that their efforts will be suitably rewarded. This method promotes efficient employees and weeds out those who are inefficient.
This method suffers from various disadvantages, and these are: A. Under this method, focus of the workers is on quantity produced and not quality. B. It is comparatively difficult to develop, install, and maintain various performance standards because every time employee performs at different level, their salary has to be calculated again and again. C. This method is suitable only for those organizations who can measure output per employee. It's not suitable for those organizations whose performance standards cannot be established directly. D. In order to produce more and more output to earn higher wages, employees train themselves. E. As employees train themselves, they exert themselves, which poses health issues for them in long run, which is not good. F. Employees who are not able to perform well in terms of output produced are demotivated. G. Because of differences in income level earned, because of disparity in salary structure, there may be conflict in labor relations. H. The labor union is against this method as it creates sense of insecurity among them. Now we shall discuss the suitability of this method. This method is suitable in the following conditions: A. When output can be easily measured. B. Job is of standard nature. C. When there is direct relation between employee's effort and output produced. D. Quantity is of major concern than quality. E. Where constant supervision is not possible. F. Cost control is of prime concern. Moving on to the last method, balanced method. This method is a combination of the two methods discussed previously. According to this method, worker is guaranteed a fixed wage rate based on time rate along with the provision of piece wage method. So if a worker produces more quantity in given period, he earns more than his time wage. So he is suitably rewarded or compensated for his efforts. More the production in one period, more he will earn and less he earns in second period. He has guarantee to earn some fixed level of income. This method provides security to worker in terms of earnings, and at the same he is motivated to produce more because of presence of piece wage system. This method is suitable where workflow is irregular like docks etc.
As discussed earlier, we can see that though at times we use wages and salaries interchangeably, but in reality there's a difference among the two. The points of differences are: according to Yolder and Henneman, wages are the compensation of wage earners, the numerous employees who use the tools, equipments of their employer to produce goods and services that are sold by the employers, while according to some Income Tax Act, salary can be defined as remuneration received by or accruing to an individual periodically for services rendered as a result of an expressed or implied contract. Wages are paid on per hour or per day basis, while salary is paid on monthly basis. Wages are paid to manual workers who are also called blue collar workers, while salary is entitled to white collar workers like employees, supervisors, managers, etc., who hold more responsible and the higher position in the organization. The expressed in hourly basis, while salary are expressed in packages, which includes various items like salary, stock options, retirement benefits, etc. Packages are usually expressed in annual basis. The former is given to a manual worker who put in their physical strength and efforts in the organization, while later is given to the employees who use their intellect for the organization. They basically put the mental efforts for the organization. Wage earners do not get any benefits like medical insurance, education benefits, retirement contribution, while salary earners get all of the above mentioned. Wages earners do not have any provision of the paid vacations. They are also not included for pay for sick days. Salary earners, all these benefits are given. Wages are counted as a direct expense for the organization as they contribute directly in the production, but salary is considered as an indirect expense as they are not directly involved in the production process. For wages, there are acts like Minimum Wages Act 1948, Payment of Wages Act 1936, etc. While for salary, there is no such particular act which ensures the minimum salary to the employees. Wage earners are paid for overtime, while is usually more than per hour rate, while salary there is no such provision.
Let's throw some light on the system of wage determination in India. Determining of wages are becoming an important concern for the organizations. The idea of wages in India was started by Government of India when they formulated Industrial Policy Resolution in 1948. In this, government has promoted the concept of minimum wages as well as fair wages to all the employees in the organization. To promote the same Minimum Wages Act, Payment of Wages Act, etc. were introduced. The basic principle that should be kept in mind while determining salary or wages should be knowing the relative contribution of different jobs towards the organization. It should not be only on the basis of who are the job holders, but also on the basis of their relative contribution towards the organization, which is precisely done by job evaluation, which provides relative worth of the job. Job evaluation provides information about worth of the job and its contribution towards the achievement of organization's effectiveness. Various guidelines that should be followed while administration of wages and salary are: 1. Wage policy should be developed keeping in view the interests of all the stakeholders of the organization like employer, the employees, the consumers, the community, etc. 2. There should be uniformity as well as consistency in the wage policy of the organization. It should be stated clearly in writing to ensure consistent application. 3. Wage and salary administration should be consistent with the overall objectives of the company. 4. It should be an integral part of the financial planning of the planning, as if it goes wrong, organization can face problem in the long run with increased absenteeism, etc. 5. Wage and salary plans should be flexible, yet should have some degree of stability. It should be responsive to changes in the internal as well as external conditions of the organization. 6. Management should communicate their compensation policies and should ensure that employees know and understand the wage policy of the company. 7. Wage and salary plans should be such that it should simplify administrative process. 8. They should be in accordance with statutory provisions. 9. Wage policy should be reviewed periodically and should be revised if the need arises so as to make sure they are in conformity with changing needs. Thus, by following these principles while determining and administering wages and salary, the objectives of an organization to establish fair and equitable compensation, to attract competent personnel, to retain present employees, to improve productivity levels, etc., can be effectively met. Now we shall study few legal aspects of wage and salary. Various acts to be followed by employer. There are various acts which have been implemented in order to make workers get paid fairly and they are guaranteed minimum wages so that no unwanted deductions can be made by employer. Various acts have been discussed below.
We will commence our discussion by studying the Minimum Wages Act 1948. International Labour Organization provides a mechanism for fixing the minimum wages in various parts of trade to encourage the protection to the labour. The objective of this act is to ensure the welfare of workers in competitive market by providing them at least the minimum wages which will help them in living a decent standard of life. This act enables the central and the state government to fix the minimum wages for wages in selected number of industries like those employed in rice mill, flour mill or dal mill. Those employed under any oil mill, those employed under any mica mill, those employed in leather manufacturing, and those who are into the woolen carpet making, shawl making, etc. Those who are employed in loading and unloading of the railway goods shed, stone breaking and stone crushing.
Following points should be kept in mind while calculating minimum wages. 1. The working class family should be taken to 3 consumption units for one earner, the earnings of women, children and adolescents being disregarded. 2. Minimum food requirements should be calculated on the basis of the net intake of 2700 calories as recommended by Dr. Arquoid for an average Indian adult of moderate activity. 3. Clothing requirements should be estimated on the basis of a per capita consumption of 18 yards per annum, which would give for the average worker's family of 4 a total of 72 yards. 4. In respect of housing, the norm should be the minimum rent charged by government in any area for houses provided under the subsidized industrial housing scheme for low income groups. 5. Fuel, lighting and other miscellaneous items of expenditure should constitute 20% of the total minimum wage. Now we will move on to the Payment of Wages Act 1936. Before this act, workers were delayed their payment and that too for no reason. Even unreasonable deductions were made. So this act was passed to regulate payment of certain class of employees, especially those employed in the industry. This act is mainly meant for employees employed industries who did not get very high salaries. So this act included measures to check for irregular payments along with unauthorized deductions. This act is divided into 3 parts. Part 1. It deals with regularity and payment of wages by the employer. Part 2. It specifies the heads under which deductions are to be made from the wages. Part 3. It provides place for enforcing specific claims arising out of delay in payments. We will now throw some light on suitability of this act. Basically, this act is for employees employed in factories, railway, etc., who are earning rupees 600 or less than rupees 600 per month. This act also provides that where less than 1,000 employees are employed, wages should be paid to them before the expiry of the seventh day of the month. For organizations where more than 1,000 employees are there, they should provide them wages before the 10th day of the month, else they are liable for penalty. Moving on to the Payment of Bonus Act 1965. Bonus refers to the extra dividend to the shareholders of a company. It is also referred to the gratuity to workmen beyond their wages. It represents desire of the company to share the surplus generated by the company by efforts of all the employees of the organization. This act came into force on 5th September 1965 with object of paying bonus to the employees of certain establishment. Minimum bonus of 8.33% of the wages of the employee with maximum of rupees 600 is payable to employee. This act is generally applicable to all factories and establishments employing more than 20 or more employees in an accounting year. But it is not applicable in certain organizations which are named below: Reserve Bank of India, Unit Trust of India, State Financial Corporation, universities, and other educational institutions.
To conclude, we can say wages refer to the compensation paid to workers for their contribution towards organization in monetary form, while salary refers to a fixed regular payment typically paid on a monthly basis but often expressed as an annual sum made by an employer to an employee. Though wages and salaries are used as synonyms many a times, but they are actually different. Wages are given to blue collar workers, while salary is payable to a white collar workers. Wages are given to blue collar workers who are directly involved in the production process, while salary are given to white collar workers like supervisors, managers, etc., who are indirectly involved in the production process. Though both of these are different in context, but form an important part of compensation. So while determining the compensation for the employees, adequate consideration should be given to them so that the labor friendly environment can be created. Also, various laws like minimum wage law, payment of wages act should be kept and properly followed while deciding the wages